Today, we are going to talk about Bitcoin, which is currently trading just above $77,000. And there is a lot to talk about before we switch to its chart. Well, first of all, Bitcoin set several records this week. It began its growth on August 17th, but the main impulse movement occurred on August 19th. And according to the resource CoinGlass, which has been keeping statistics since 2021, the largest daily liquidation of short positions in recorded history occurred on August 19th. Positions worth $2.7 billion were liquidated. Of course, these were short positions. Moreover, there was also a record for hourly liquidation. In just the first hour of this movement, $1 billion worth of shorts were liquidated. By the end of the week, by Friday, this volume had already increased to $4 billion, according to Bloomberg data. And here we need to recall once again who rules the market. Many news agencies explain this growth by the fact that the American government, represented by Donald Trump, announced the buyback of government bonds. That is, the yield on bonds, the so-called treasuries, became lower, and money moved from the risk-free market, and these are effectively risk-free financial instruments because their yield and their redemption are backed and guaranteed by the state. So money began to flow from the risk-free market into the market for risky financial instruments, which perhaps in some sense is true, but in reality the main reason for this growth is something completely different. And it lies precisely in these liquidations. That is, a huge number of bears had accumulated in the market with their short positions, and accordingly, the market moved in the direction of least resistance. In other words, short liquidations were covered by purchases and automatically pushed the price even higher. So, the short sellers were effectively driving this growth. And as we could see, there were more than enough short sellers. And accordingly, the question here is not whether Trump is controlling the market or not. He once again acted as a catalyst, merely pushing and amplifying the movement that was already expected in the market from the start. I want to remind you that my previous review on Bitcoin asserted the fact that technically Bitcoin had turned upwards and was looking towards the $69,000 to $82,000 range. And while 82 looked like a fairly debatable figure, it has nevertheless already reached $79,500. And it must be said that this is Bitcoin's best 5-day growth since 2023. If Bitcoin closes the week above $76,700, it will be the best week in the last 3 years. And at its peak, reaching $79,500, Bitcoin showed its best result in the last 5 years. I also want to point out that the 27% growth turned into 22% because a pullback followed, and it cannot be said that it is sufficient for such a rapid rise. But I will say right away that with such a powerful upward breakout, as a rule, the movement does not end. That is, the direction of the trend is most likely set for a long or, at the very least, medium-term period. That is, I do not rule out that Bitcoin could rise not only to the $82,000 we talked about in the previous review, but it could also go somewhere higher, above 100,000, and perhaps even reach a new annual high. But let's analyze the chart and see what prospects Bitcoin has. We are looking at daily candles. Here you can see 27% growth, or to be precise, 26.69%. These are huge non-retracing candles, and they hint that Bitcoin might potentially head towards the nearest moving average, which is the 200-day one, in the area of 69,000. It's not actually forbidden, but formally there is no reason to open short positions on Bitcoin. I would currently proceed exclusively from long positions after we see a correction, either to the middle of the large green candle or to its base. The middle of the candle was actually reached today. It was in the area of $75,700, and in principle, one could try to open a long position with a stop loss below today's low. Well, the base of the candle is significantly lower. It is also very important to set a stop loss here, but not upon reaching the level of $73,027, but rather after we see a reaction to it, if we even see this level in the near future. That is, I am inclined to believe that we will see continued growth, and if you haven't taken a long position, the key question is where to enter a long position. But I have already mentioned the nearest levels. That is, there is a chance that Bitcoin will continue its growth from current levels, and its nearest technical target is this circle, along which we have drawn the dashed line of the downward trend. It would be logical to test it, But with such a powerful movement, such a deep pullback is unlikely. But again, I'm saying that if we see a decline to 73,000, you shouldn't go long immediately. You need to wait for a reaction to this level, see a bullish engulfing pattern on the 4-hour candles in this area, and only then take a long position with a stop loss below the low of the candle that formed this engulfing pattern. So the nearest target zone for Bitcoin's growth is $82,200. We have talked about it. If Bitcoin breaks through it, then $84,739 follows. Pay attention, this is the point from which Bitcoin actually started its next wave of deep decline. Now we are deleting absolutely all the markings. I have outlined the levels from which you can try to open a long position and the conditions under which you can open it. And it is mandatory to do this with a stop loss. And now we are deleting everything and switching to monthly candles. What do we see here? The picture is quite interesting and borderline. Let me remind you that in the previous review, I said that Bitcoin definitely has a bearish outlook on the monthly candles. And I must say that at the moment, nothing has changed yet. That is, yes, Bitcoin is currently absorbing 2 months of decline at once, the May and June candles, but there is still about a week left until the end of the month. And this means that if Bitcoin gets a pullback on the current candle and closes below $73,674, and this is very likely in order to make the situation on the chart as unclear as possible, well, if it pulls back down and closes lower, then we will have to think very carefully. This is a marginal correction followed by a decline, yes, with a likely retest of the high in September, but again, with the chance that we will get a very deep downward move, because in such a scenario, the June candle will not be engulfed. Or we will see continued growth, but without any chance for an entry point, just as there were no chances for an entry point on June 19th. Let's go back to the daily candles. I will demonstrate this to you on a clean chart. On the daily candles, I pointed out a very important level to you, right? Some kind of correction ended there. Yes, after a deep drop, there was a new low and a test of this level with a complex breakout. I said that as soon as we see any daily candle close above this level, it's a long. But pay attention, that's exactly what happened. But look at what a massive breakout there was beyond this level, $66,328. And this happened exactly on August 19th. That is, in fact, you had the right to open a long position. We closed above all moving averages, but technically you should have placed a stop below the low of that day, which means your stop should have been at the $64,000 level with an entry point of $69,000. That is, the stop size is $5,000, which is a 7% downward move. Well, that's quite a lot, and the entry point turns out to be unsuccessful. In other words, they didn't give a chance to enter. And so, returning to the monthly candles, we can get exactly the same picture. That is, the key level at the moment is this one, meaning the engulfing or non-engulfing of the June candle. And if we close right below this level, it will be unclear whether we will break through or not. But when we do break through, if that happens, the breakout could be, well, of this kind of size, you understand? And they won't give you an entry point anymore. Well, from the perspective of monthly candles. Nevertheless, here and now the monthly candles are hinting at growth. And if we assume that Bitcoin closes the month in this range, well, that is $77,000 or slightly higher. Then the next technical level for growth is, of course, this candle here, which is $87,648. Although in reality, I would change it to this level here, right? Because here, notice we had the end of the correction and further growth. And here again, the decline started from this level. That is, well, $82,550. For some reason, I think that we will see this level with a high probability. And again, I am only assuming that in order not to clarify the layout on the chart and not to give a clear understanding of whether Bitcoin will go up or down, we will close the month below the level of $73,674. Well, it seems to me, and it often happens this way, that they will bring the price here and we will close somewhere around here just a little bit lower. That is, yes, it seems like growth, but without engulfing the June candle. Then you're left guessing. But, even such a close would imply breaking the August high in September. And that means that this break of the high will most likely reach the value of $82,550. And if we do close above this level, Well, for example, in September, although who knows, maybe it will happen in August, then we are talking about higher growth and potentially it could even be $102,000. In principle, we could end it here, but the review would be incomplete if we didn't look at the weekly candles. And the weekly candles, by the way, point to continued growth. Why? Because the 50-week moving average is located very close by in the area of that same $82,000. And it makes sense since we've risen so sharply and quickly to test the 100-week one as well, and that's practically $89,000. All in all, I'm leaning towards continued growth, but it's very important to see that the current week engulfs, first of all, this bearish candle, and preferably this one too, or at least closes higher than $73,675. This will indicate further movement towards the area of both the 50-week moving average and this candle close high from May 4th at $82,210 and potentially even $89,000. We will consider this based on the actual close of first, the current week, and second, the August candle. Follow the reviews, subscribe to the channel, and leave your comments. I will just remind you that all my trading and all my analysis take place on the QuantFury platform, where you pay no commissions and no fees. In my opinion, this is the best platform for trading. I recommend it to you. The QR code is on the screen. Follow the link to the website. You can trade directly from your computer. Goodbye.